you're not in a business of lending. You are not a bank. You are not a Shylock. You are not a microfinance.
No.
If your friends come your way and they are borrowing money, please, could you kindly take them to your bank? Look at how ironic that is.
So initially you feel like there's too much time left.
Yes.
Then when it finally hits you, you feel like there's not enough time to do anything
It's
really.
true.
So you end up not doing anything. And then now you're at the end of your career and this never even, I mean.
There are 4 money personalities. The first guy is called a spender.
Spender, I'll tell you where I am.
Yes. The second guy is called a dreamer.
Dreamer.
That guy is called a saver.
Saver.
The final guy is called an investor, honestly. If you buy a Matatu at old age, you can be sure 6 months later you'll be buried.
6 months.
6 months later you'll be buried. People don't want expert advice. We think that expert advice is expensive. So we want to try the mediocre way. We think that you can be able to beat the system. That ladies are becoming more conscious on money matters and a lot, of course, other life issues than the men. Men have actually gone into spending. A wise man and I believe a woman leave an inheritance for his children's children. But don't be that person that is going to die broke.
Good morning, good afternoon, good evening, wherever you're watching us from, and thank you so much for joining us on yet another episode of Unprepared to Entrepreneur, the channel where we talk about real, raw, and often untold stories of entrepreneurship. And today I have a really important guest. I met Mr. Alfred at an event, and when I heard him speak, he spoke to my younger self, and I wish I had met him earlier. This was, I think, around last year. And so when I called him and he said yes and agreed to come and we do this recording, I was truly, truly honored. And I can't wait for you to hear, please listen to all his wisdom, because what he said then changed my life. And right now, I'm sure this conversation is also going to change me in one way or another. And I hope it gives you just a little bit more courage to fail forward and achieve your dreams. So, Mr. Alfred, karibu sana. Please introduce yourself.
Thank you so much. Good day, everyone. My name is Alfred Mathu, and I'm a financial consultant. I give people advice on all areas of investments. I trade in the name of East Africa Insurance Agency, which is an intermediary of 2 organizations that are very customer-centric. This Old Mutual Life Assurance Company and the Absa Life Assurance Company. As a financial consultant, my role is to help potential investors out there to be able to make guided, decisions in as far as money management is concerned, and to be able to achieve their long-term, medium-term, and short-term financial goals through investments. Yeah.
We are really happy to have you. And like I referenced in my introduction,
Yes.
we met at that event, and
Yes.
I think I listened to you, and like I said, I wished that I had met you sooner. I don't know how that did not happen, because I know you're very active.
Yes.
And you talk a lot about financial management and planning for your future.
Yes.
On this podcast, usually we talk about our journey in entrepreneurship, and I'm sure you have a story on that, but maybe just from interacting with as many people as I imagine you do, right?
Yes.
What is the one big mistake most Kenyans are making right now when it comes to financial management?
Thank you so much. There are multiple of mistakes that Kenyan people are making in as far as financial planning is concerned. And one point I want to throw here is that there's really nothing wrong with making some of these mistakes. Mm-hmm. But when you get an opportunity to learn, for me, it would be unfortunate if you go back into making the same mistake even after learning. If we were to look at some of the most common financial mistakes that I've observed the masses of Kenyans are making, one of them is whatever investment agenda, people start without a budget. Mm-hmm. People get into the idea without sufficiently researching on the budget requirements. Mm-hmm. So what is a budget? A budget is that tool that helps you to understand your financial ability, what comes into your account, at also what leaves that account. Mm-hmm. Whatever that is coming in, from where? Whatever that is going out, to where?
To where?
Is it going to build for me reserves? Is it just for basic expenses? Where is this money going? And of course, when you have that clear understanding, then you put controls. When you understand your budget, you'll be able to assess your financial ability to be able to start an idea or to be able to grow an idea into an enterprise that will then be able to give you, future
returns.
Returns. So that's one of the main ones. Let me also talk about another one, also very, very importantly, is something we call procrastination. A good idea has been sold to you, you like it, and you feel this is something you need like immediately, but for some reason, the bulk of Kenyans want to do these things tomorrow, not today. They feel even after realizing how important the idea is, and you have got all that it takes, you feel like tomorrow will be better to execute than today. There are lots of people that have procrastinated until the rest of the time. By the time you start to think straight, by the time you start to think soberly, you no longer have the opportunity, and if the opportunity is there, you no longer have the resources, and if the resources are there, you no longer have the energy.
Or the time.
Yes, or even the time.
Yeah, sometimes you actually do run out of time.
And there was good things, like I was telling you, right now, a lot of Kenyans are running around with their New Year resolutions. Not for 2025, for 2024. This is the time Kenyans are waking up to start now addressing the goals of this year. We are now in September. The goals were supposed to have started off in January.
Yeah.
But 9 months into the year, that's when a lot of people realize that, hold on, the year is almost gone. And because the Kenyan way has always been a 9-hour way, this is the time that a lot of people are waking up to start, dealing with their 2024 resolutions.
Yeah.
That's what a lot of people are doing.
Unfortunately, keeping time is a big challenge for us.
True.
Yeah, and if you don't keep time,
yes,
even like, let's say for a meeting like this one,
yes,
you will procrastinate. Even you don't keep time for yourself, the things that matter to you.
Yes.
And especially when they involve saving. And I mean, I don't know, the guys who don't keep time, correct me if I'm wrong, are not very good savers. Like, it's not possible.
They go hand in hand. Time and money.
It goes hand in time and yeah.
No, that might be something else that I actually want to bring in here. There are a lot of people that have got what to call bad financial habits. And I want to talk about this because I know in one way or the other, all of us here are affected.
Please do.
Let me tell you what, Anne. You're not in a business of lending. You are not a bank. You are not a Shylock. You are not a microfinance.
No.
If your friends come your way and they are borrowing money, please, could you kindly take them to your bank? Because you are not in the lending business.
Yes.
It is one of the ways that I found most of the people
lose money.
Ended up losing their money. That friends come your way, you give them your money, you end up giving them your money, and in fact, you give them money that is meant for critical purposes in the family, and then that person that you've given the money doesn't pay back on time or not even pay at all. I'm sure at this particular point, and if I checked with you, there are people who owe you and they're not picking up your calls. There are people who owe you and they're not even returning your calls. There are people who owe you and they're not even returning your messages. No. There are people that owe me and they're not even responding to my calls at all. At any one time, you always come across people who are owed, and the ones that are owing them are not even responsible enough to be able to deal with the situation. It's a big mistake that a lot of people are doing. I want to tell you that.
There's this thing, especially when you come from like a humble background, and you're the one that made it. Yeah. You know that scenario where you everybody else, you grew up struggling. Most of the people are still struggling, and you're the one that made it.
Yeah.
So when they call upon you for help, sometimes it feels like you owe them a hand as well. What do you think of that? Because it's a real issue with Kenyans.
People have got to be a bit realistic.
In Itambwa, black tax.
It's called black tax. People have got to be a bit realistic. And that's why I talked about budgets. There's really nothing wrong with allocating a small portion of your income to be supporting your siblings, to be supporting your parents, to be supporting those people that matter to you. But to what extent are you willing to go? Are you going to an extent that you're going to jeopardize your other critical expenses? That you also get yourself in the same cocoon of struggling every single day?
Expenses, maybe not, but my investments, our mentality is like investments for the future, right? It's not money I need now. Yeah. So that's usually the money that goes into black tax.
Yes.
And that's why you find most firstborns are very bitter later in life because they did not save enough
for themselves
because they spent it on the family members.
True.
And the family members, some of them excelled, some of them wasted their opportunity and their money. And now you're at the end of your working career, and you have nothing to show for it, but you can say, I helped my family, for example.
Anne, I had a sitting with a certain lady who is working for an international organization just about 2 weeks ago, and she had a shocking story. She told me that they are born 4 in the family, and she happens to be the firstborn. And she was fortunate to have gone through the system, cleared university, and got into a good job. But soon after, the entire burden of taking care of the siblings was thrown to her by the parents, which is agreeable, not a problem. She took care of the siblings. When they cleared university, they got married, and they started now giving their children to their auntie to also support them. The same lady now, who supported these 3, started supporting the children of the 3. All of them are now married. It just hit her the other day. Now she's 50. She's not married. She does not have a child, but she's busy educating other children. She's been busy educating her own siblings, and she's almost now starting to regret that she abandoned her life for the sake of others. For me, it's about balancing the equation. How much are we willing to put aside to support the family members? If you have cleared money, give what you can afford to lose. Don't give what is going to affect you, because people are going way beyond.
Yeah.
For example, if you had a loan that you're paying the bank, there's no you're going to tell your bank manager that the reason I'm not going to pay the installment this month is because my brother came in last month or last week and I gave him some money. I'm easier to pay back. There's no such a story to a bank manager. One has got to be responsible enough to be able to do a budget that allows for such expenses, yes, but of course also puts into focus your exact current situation.
Yes.
Let's not go overboard.
That makes sense.
Yes.
Yeah,
People
that makes
don't
sense.
have to go overboard. You want to build a house for your mom, yes, but why don't you also be sober enough to raise the kind of house you need to do for her, so that you don't overstretch and live on a break.
Yes.
Because we also don't want you to fail financially, and because you had a goal for your mom or your dad.
Yes.
I want them to be supported. Yes. But can you do that with reason?
Within certain
some certain limits.
Yeah.
You don't go overboard.
Yes.
That's what people are doing.
Boundaries. Have some boundaries.
I've seen people buying even expensive cars for their parents, which is not a bad thing.
Not a bad
thing. And later on, your own car is towed by an auctioneer because you defaulted. You defaulted because you diverted all the money into buying a very expensive car for your parent. Now you're not even able to sustain your own obligation.
I understand
so
that.
I think for me it's about
that doesn't make any
balancing the equation. And it's important. When it comes to money matters, you have to pack all your emotions and be very, very sober.
That's
because
true.
That one mistake that you're doing today is going to cost you.
So have some boundaries.
Yes.
Yeah.
I think for me it's
limitations.
Yes, it's important.
So as you were building HISA, what are these challenges that you experienced that completely changed the way you grew the agency?
I think for me, when I started off the HISA Africa Insurance Agency, one of the things I was looking at is succession. How do I build my legacy? Because previously I've been employed. I've been a GM within the business.
I see.
And I knew too well that when the day comes and I leave, that will be the end of that story of having been a GM. If I died before, there's nothing my children are going to inherit from that career, other than maybe the final benefits that are paid by the employer.
The pension.
But growing my own business and then slowly incorporating my children as they finish school, I incorporate them in the areas of their expertise. I knew this is going to be a business that is going to support not just me, not even them, even the
generations after.
Generations to come. And I'm very, very happy that has actually been the trajectory. I'm going that direction. I'm happy to be doing what I'm doing today and helping most of the people out there to start becoming more conscious on money matters and especially financial planning. And that is also what I'm trying to encourage my children to also come in and help me to push as an agenda.
Yeah.
The hostility that a lot of people had previously on money matters is now slowly dying.
It is.
For the longest time,
we'll see. First of all, let me speak, from a layman's, because I was that person, where we could not differentiate between a financial advisor and a guy selling you insurance. They sounded the same to us.
They were hawking insurance. I cannot even say they were hawking.
Yes, and the guy, if you've met and maybe given him 5 minutes of your time,
Yes.
oh my God, he'll be on your neck. So you'll be seeing him enter. You
run away.
This other direction.
Yes.
Because financial advisory and the investment products that were available, even then, I think they have sort of like evolved.
Yes.
They sounded like insurance to us. It sounds like insurance. And you know how Africans are with insurance. Si lazima.
Yes.
You get it's not
That's
a must.
True. That's true.
Nobody quite could break down. I guess also Gen Z wanasaidia because now people are reading the fine print.
Yes.
And understanding where their money is going. In fact, most people are not keeping money in their banks, but you know, about 10 years ago, that's where you would keep your money. That's where you know it to be safe. Now you're wondering how much percentage am I earning from my savings account, and what are the options I have, and not just options, which firms are available for me to be able to just vet, analyze and see which one suits me best. We have come a long way
very, very
from
very
running away from from a financial advisor thinking they're just here to sell you insurance to now quite listening to understand, because we really want to secure our future. But how was it for you?
Let me tell you,
like at the beginning.
Let me tell you what.
That sounds like a really
difficult business. I still remember very, very, very clearly those days, way back 1998, 99, 2000, when I was freshly employed. And sincerely, the biggest percentage of Kenyans out there, even the ones that had the financial ability to take up the products, the willingness was not even there. The industry has struggled for the longest time. But I'll tell you that in the last few years, I've seen one of the biggest transformations, biggest evolution, is a big turnaround in the industry. I think one due to access to information.
Access to information.
Today's investors are not the investors of 10 years ago.
No.
People today have got all the information that they need. Even as they call you, they just want you to come and give them that confidence that what they had in mind, what they read, is actually their true position.
Yes.
Even as they take up whatever product that they need at whatever stage of their life. Then let me tell you something else. We're coming from those times when agents of the day ended up defrauding and even conning people. And there was no way of getting hold of this person or even getting justice done.
Justice for them.
Today you make one mistake.
Yeah.
You know the power of social media in Kenya.
Oh yes, yes.
Make one brander.
Yes.
That one customer that you offended.
Ruin your brand.
Will put it in the social media.
Yeah.
And within minutes the entire country knows.
Yeah.
That you are a con person, you are a con man, you are a con woman, whatever you are.
So that is actually helping with accountability.
Totally. Accountability.
Yes.
Now
because you don't want, you know, if you would go sell insurance at this corner of town,
yes,
run away.
Yes.
But in fact, there could be two buildings, but the guys in the two buildings will never sit and have a conversation
that
about
is so true. That is so
scrupulous
true.
That guy is. Yeah.
Even the products that the industry has presented to the market have completely changed. The fact that people have got this much understanding of what they need and what they are looking for, you got to present products that are actually adding value to people. If you're not in that space, be sure that that company is slowly thrown out.
Yes.
And indeed, some companies have closed.
Yeah.
The competition is now, today, is about value that you give the market.
Yes.
And the customers know that.
If you sit with the customer and they realize you don't know what you're talking about,
yes,
they're just like, no, this is not the person.
Let me tell you now the level you've reached. when let's say an investment policy has matured and a company has delayed settling the claim, within minutes like this, the regulator has the information. And I'm telling you, it's so punitive. You're going to be penalized very, very, very heavily as a company. But you know too well that if the customer has presented all the documents for payout,
yes,
I think law requires that within 14 days, that person should have their money in the bank. But you know, a few years back, policies would mature and companies would start taking you around about some prints here and there, and it would take you 2, 3, 4, 5 months. That time they are still making use of your money, making value out of that money at your expense. Those days are now gone. The regulator that you have right now is very, very strict. The investing public out there has the information. And of course, the social media is working.
Yes.
So I think for me, there has been multiple ways in which the industry has
evolved. Yes.
And it's for better.
Yeah.
It's for better right now because the penetration of our services now is not just within the urban areas.
Yeah.
Even in the rural.
There
are people that you find out there, maybe they are farmers, they are doing dairy farming.
Yes.
They understand these things. They're even able to go online and check the status of your company.
Mm-hmm.
They're going online to check the status of that product. They're checking with their friends. They compare notes.
Yes.
By the time they are calling you, they have already somehow made up their mind what they need. Yours is just to come and show them the numbers and how they relate to their
literally, they just want to confirm you're the right person
True.
They already know the product.
That is true.
They already know the service they're expecting from you. They just want to verify, is this the right person to do this?
That is true. Now, let me tell you something else that I have witnessed. Unlike those old days when we were pushing for the sales in, the hard sales, call them.
What was the most popular product then, by the way, if I may ask?
Calling them endowment policies. An endowment policy is a policy that comes in with an investment element and life cover element. They're still very popular even today.
I think they're still one of the most
investment
popular.
Is still there.
Yes.
The risk aspect is also there.
Yeah.
So the endowment policies, the only thing that has happened is that companies will keep tweaking them just to make them more and more relevant to the current market.
Yes.
But it now reminds me something, that those were the days that you'd even go a whole month without even getting one referral. Referral is somebody who is being referred by somebody else who has consumed your product. Because everyone was trying to avoid us. You go a whole month.
That was right.
Yes. You're going a whole month, no one really wants to give you the attention. And those that are listening are not willing to buy. Okay? There was no commitment totally to take up some of this.
Do you know?
But today, and it's most amazing, I don't think I'll go a day without at least an average of 2 people that are sent to me, even as late as today. I always get at least an average of 2 people that have been sent to me. I know why. Some of the guys that I brought on board and they consumed this product, 10 years down the line, these products matured, they got the benefits, some of them bought houses, others educated their children, others pursued their other investment goals, and they have seen the value of these investments.
Yes.
And as the journey continues, people now appreciate our input to the market.
Yeah.
That to the extent that they want to encourage many more people, their friends, children, to also take up the
advantage of time.
Yes.
Right? Then the few, let's call them early adopters.
Yes.
Now their products have matured.
Yes.
And they've told others, and people are like, oh, this thing actually, wow. Because everybody is just like, okay, 10 years from now, your company, what if you've wound up and gone, I don't want to,
I've got an interesting couple who are my clients from way back to like 20 years now. And we've run so much together in terms of investments. At some point, they have had their maturities. At some point, they have taken up new ones. And as we speak right now, they've got ongoing investments with me. And I had the most pleasant surprise last month. When their daughter, who just graduated from Strathmore, got a job, and on the first pay, the first call was to Alfred Mathu. Called me, Uncle Mathu, I've been given your contact by my mom. She tells me that I should take up an investment plan with you on my first pay. Believe it or not, she just got her pay end of August. And as she was expecting the pay, the first thing she did was now to start her own personal investment.
Yes.
And I asked her, what is this that you want to buy, with this money one day? To me, Mr. Mathu, what I want to buy myself an apartment. Now look at that.
22 years old.
The girl is hardly 22. She's on her first job. She just got in August, just last month, her first pay. And from that first pay, she's already removed an installment for her own personal investment.
Oh,
that is the gospel that makes a lot of us too happy.
Yes.
But then the irony is now when you come across men and women that have been working the last 20, 25 years, they are nearly getting to retirement and they're still feeling like there's so much time ahead of them, they don't need to start now. There's too much time left. Look at how ironical that is.
So initially you feel like there's too much time left.
Yes.
Then when it finally hits you, you feel like there's not enough time to do anything.
It's
really.
True.
So you end up not doing anything. And then you're at the end of your career and this never even,
in my journey, the last few years that I've been working and doing what I'm doing today, I've found out that there are 4 money personalities. And I want to talk about them. There are 4 money personalities. The first guy is called a spender.
Spender. I'll tell you where I am.
Yes. The second guy is called a dreamer.
Dreamer.
That guy is called a saver.
Saver.
The final guy is called an investor.
Investor.
Now, I want to explain each of these categories. A spender are those guys that spend their money majorly on lifestyle. Their today matters more than tomorrow. They are willing to spend the last shilling for gratification. They'll even spend money that is borrowed. They'll be carrying credit cards wherever they go, their debit cards wherever they go, because they need to have the money to be able to make them happy at the point they want to be happy.
Yeah.
For them, it's not about tomorrow.
Right
it's about
now.
today. Those are the spenders. The second category are the guys that you call the dreamers.
The dreamers.
The dreamers, interestingly, they know what they need to do with their money to be able to achieve the various goals. The biggest monster in their space is procrastination. They want to do it, but not today. Maybe tomorrow, maybe next week, maybe next month, maybe next year.
I think
and
I'm
they keep
a dreamer.
postponing. And they keep postponing. They keep postponing. The problem with them is that they procrastinate until they run out of time. Some people have procrastinated from the age of 30 and only got hit by the reality at the age of 55. 5 years to retirement. Those are the dreamers. I want to talk about the savers. Savers are guys who are very, very conscious about putting aside. Unfortunately, where they put aside is in a savings environment rather than investment environment. The problem with the savings account, for example, is that the return on your money will never beat inflation. So the savings account is operating at 3%, but the inflation rate is at 10%. So you generally
You're
see a
losing
net
money.
of about 8%.
You're losing money.
So that is where the savers are. But you see, they are better than the dreamers. Now, let's go to the next category. The guys that we call the investors.
Investors.
There are three parameters that define investors. The first one is that they are very futuristic. These are guys who are looking at 10 years from now, 5 years from now. A child has been born. They want to start investing immediately because they know 18 years from now the child is going to university. For them, they are looking at the future. They're very futuristic. If you've got a friend who is always looking back, they always talk about last week, they always talk about last month, always talk about last year, that's not an investor. The second thing about an investor is they are very diversified. An investor will hardly put their money in one asset class. They diversify the scope of investment because they know the various asset classes will take care of the various needs. So they're very diversified. But you hear guys that only put their money in land, every time you get money, another plot. Every get money, another plot. At the end of the day, you have so much of solid at the expense of liquid. You are asset rich, but cash poor.
Cash poor.
That person is not a real investor. Because a real investor diversifies the scope of the investment. You don't need to sell off your car to pay school fees. You don't need to do a part withdrawal of your pension to pay hospital bill. You need to be careful enough to invest in the various platforms that will take care of the various needs. Let me talk about the third and the final one, about the investor, is that they work with their accountability partners. So an accountability partner is somebody who is a level above you as financially, and they are the ones showing you the way. This guy understands your financial story inside out. The guy knows you by your name, knows if you have a spouse, the name of your spouse, knows if you are a golfer, knows which club, knows which bank you work with, knows which are the goals that you are pursuing this year. And the only thing that this guy is trying to do is to help you to achieve that agenda because they have been there before. When you want to take up a loan, they're even guiding you which bank can be able to give you the most, the best rates. Now, that's an investor for you. But how many Kenyans do we have who can genuinely be called investors? 2%.
Oh, that's the statistic?
2% of Kenyans are investors.
How many are saved?
The rest are jokers.
How many are saved?
Now we can break down the rest. But for me, the greatest one is that the category that is investing is only 2%.
It's only 2%.
2%. The rest
I
are
think
just
many
jokers.
of them I can just make a guess here
Yeah.
are dreamers.
Yes.
Procrastination
Yeah.
is a big animal.
It's a big monster too.
It's a big monster.
Yeah.
And I've experienced it. I've seen others experience it. Whether it's from lack of confidence maybe in the knowledge, confidence in themselves, because they're like, okay, if I invest in this, for example, it's a 5-year investment. What if I don't make the third or the fourth payment, for example? And if I can speak for business owners, business environment in this country is very challenging.
Very volatile, yes.
Very volatile. In fact, rightfully so, that's the correct word, very volatile.
Yes.
So when you look at, you don't have enough confidence to commit.
I think every person understands what they are chasing in this life. And the volatility that you're talking about has always been there. Even during the time of Jesus, I want to believe. Life was always volatile. Life will never be smooth. Life will never give you what you expected.
Yeah.
There are always some surprises here and there. When you hear people like myself talk about the need to build a cushion, it is because of such times of adversity. Look at what happened, like, for example, during the time of COVID.
Yes.
A lot of the people that led a fake life were actually thrown out. There are people who lived fake life. Everyone kept imagining that this guy is doing so well because of the cars he drove, where he lives, all those things. But the reality dawned on a lot of people after the COVID. When most of the income sources were cut off unexpectedly. And months later, some people could not be able to meet their basics.
Yeah.
I am reliably told that even guys living in those river suburbs, some could not even be able to feed their families. It was then that people's big cars were taken away by auctioneers. People's houses were auctioned. People lost their businesses. I think for me, the whole idea of planning for that future still remains very important. But then there's one message I also want you to take home. When I talk about putting aside, I'm not talking about putting aside a specific amount of money.
Yeah.
For me, it is better done a specific percentage of your income. If you
I
work,
see.
if you work on a percentage rather than a certain flat amount, you will be able to achieve your agenda better than this other side.
I see.
Let's say, for example, this guy that is earning 100,000. If he saves 20,000, he's done well. That's 20% of his income that he's saving. This person that is earning 1 million, if he saves 100,000, it's only 10%. So if you ask, who of these two guys is more committed to the investment? Is it that the one who is investing 100,000, or is it the one who is doing 20,000? Given that the one investing 20,000 is earning 100, and the one investing 100,000 is earning 1 million.
Obviously, the 20% is higher.
Cool.
Yeah.
So regardless of the amount of money that you're making every month, I think for me it is important that you can appreciate the importance of allocating a percentage of that income to go into building your reserves for tomorrow. There are 3 very important aspects of your life that you need to consider when it comes to financial planning. The first one is called energy level. The second one is called your income. And that is called the expense. Now, let me talk about the energy levels. For a lot of people, when you're young, your energy level keeps building through the years. The energy level keeps building. But that will not be forever. Your energy level will build up a certain level when it will hit a peak. Your peak can come at the age of 60, it can come at the age of 50, it can come at the age of 55. And there are also instances where people hit the peak early, like in 30s or 40s, due to changed medical circumstances. When you hit the peak of your energy, the next movement is downward. Now, when your energy level is coming down, it has a direct relationship with your productivity. Call this the economic productivity.
Yes.
That the same Anne who used to make 1 million can now hardly make 500,000 while her energy level is going down.
Yes.
If, for example, look at your mom today, Anne, and I start corrected. Assuming that your mom was 50 years. Assume your mom, say 55 years, 60 years.
My mom actually just retired.
Oh, how does she approximately?
She retired at 60.
60. Now, look at that same lady when you were in high school and today. Maybe today your mom wakes up. Maybe today your mom wakes up at 7:30.
Yes.
But when you're in high school, your mom used to wake up at 4 to prepare breakfast for the children.
Yes.
She used to wake up at 5.
Yeah.
Now her energy level is now running down. And as it comes down, her potential economic productivity also starts going down. Now, from a financial advice point of view, when you're coming down, it can be a free fall. It can also be a smooth curve down. Everything will depend on what you did with your money when you are in the productive phase.
Yeah.
Now, if you never did what you ought to have done in terms of savings, you do not have a cushion to take care of you when the curve is coming down. And that is why some people have a free fall. The guy retires now, and 2 years down the line, he's bankrupt. The guy retires now, within 1 year, he's completely worn out. The guy retires now, within 3 years, he's a wreck. Yes.
In fact,
Yes.
I don't know who we were having this conversation with, and they were saying that after retirement, the guys who retire at 60 never make it to 70. Even 65 wakijaribu sana.
Yes.
Like they die before they get to 70.
And the reason is this that I'm saying.
So what
Whatever
are these
results
things?
you did.
What are these things we need to do?
You see, there's something we call income replacement ratio. And for me, I look at what was your pre-retirement income and what is going to be your post-retirement income and how long is it going to run. You used to earn 100,000 shillings. After retirement, you should have a minimum of 85% of that. If you used to earn 100,000 before retirement, after retirement, you should have a guarantee of 85,000 if you have to sustain or maintain your lifestyle. But now the greatest challenge with a lot of people is that you are at 100,000 shillings before retirement, and after retirement, it comes down to 20%, which is now 20,000. You realize that drastic change in your lifestyle completely disorganizes you, completely puts you in a financial mess. You cannot sustain yourself.
Yeah.
And that's not where people lose it. They go into drugs, they go into alcohol, they go into all manner of irresponsible things out there. You can no longer, you are completely overwhelmed. Let me finish that point that I was trying to explain about that energy level. So if you have done some savings, the savings will actually be able, as you're coming down, your energy level is coming down, the savings that you have done in your productive years will give you that cushion, which will see you through to the ages of 80, 78, 79, 85, without necessarily depending on anyone. That even at the age of 75, you are still okay, you're able to pay your bills. Even at the age of 72, you are still able to pay your bills. Now, that's the first point about energy. The income. For a lot of people in their productive phase, one thing that you might confirm and agree with me here is that income doesn't grow as fast. Yes, it's a positive trajectory, but not good enough.
No.
Even when you get the salary increment, you always say, I wish I got a bit more.
It's not...
I wish it got a bit more.
Yeah, it needs to be a bit steeper.
Always the expectation is higher than the actual.
Than the actual.
Now let's look at the expenses. If I've met anything that is obedient on this earth, it is expenses. Expenses are always going up. You don't have to motivate them. They're always going up. Whether you are young or old, the expenses know their way. They are always going up. Now, a misalignment of these three aspects is what puts people in what we call financial crisis. The expenses are going up, income is not growing, and now if you hit your peak, the energy level is going down.
Yes.
That misalignment of the three items puts people into financial crisis.
I see a lot of people after 60 starting businesses.
Yes, it's one of the biggest mistakes that you can never do in your life.
First, I agree with you because you have no buffer. Because there's always a learning curve in any business.
Yeah.
You're not going to start a business, even if that's the same business you are doing. Let's say you are working in a hardware store,
yes.
right?
Yes.
For just to simplify the example,
yes.
Now you leave and you start your own hardware store.
Yes.
Because that's the environment your career sort of left at, right?
Yes.
I can almost guarantee that's going to be a catastrophic failure.
That is true.
But why do you think this happens? Because let's say you had like a pension, you've gotten a lot of money, and most people think, okay, I'll start a business. Are they in search of the 85% you were talking about? That's the end game, not...
Let me tell you what. Most of the financial blunders that people make when they are in their productive years, they are thinking that old age is meant to help them recover.
Old age.
But old age, one of the things that you realize here is that your risk appetite is low, not like when you are young. A young person right now can make all the financial blunders they wish, and they'll have time to recover and move on. But an old person, say someone who's just retired, you make a blunder with your money, you lose it once, you've lost it completely.
Exactly.
So I think for me, it's about the understanding of your expectation vis-a-vis risk appetite.
Expectation.
If you have to go, if you have to go into business, do you have to wait until the 9th hour?
Very high.
Do you have to wait until the 9th hour?
No. It's something you should have done, like a side hustle.
Yes, you should have done a side hustle. But then after some stage of life, you realize that now this business has either broken even or is nearly breaking even. If I exit from my current employment, I jump into the business, my input to the business is now going to help catalyze the process of making profits. But now what a lot of people do is that without any understanding of the market, without any understanding of the product, they go into selling. You're not going to do it alone. You have employees. And they are aware that you have the money. And they're also looking for this money. Within few months, they have taken all the capital that
I can imagine at this point when this guy is retiring, they're at, let's say, 61 years old, right? They've employed 20-year-old. The age gap is so huge. If I look at, let's say, my dad right now, who is in that category of age, sort of
70 maybe.
Yeah, 60 to 70 there.
Yes.
And I look at the Gen Zs who I can't even handle.
Technical know-how.
I can't even
they know
handle them.
Which buttons in the computer.
And then now my father here comes and invests all his savings into a business. They will finish him.
He'll do things
in a year.
Old school. These guys have the technical capacity.
In a year,
Haven't
it'll
you
be
heard
done.
of banks where in a single day a bank has lost $1 billion? And you're asking how?
I was reading it in the papers the other day.
Yeah. These guys are smart. And if they are stealing such money from the bank, how about from an individual like your dad or my dad?
They'll finish
It takes no effort.
Zero.
It takes no effort. For them,
yes.
It takes no effort.
It takes no effort.
They're able to hack anything, any information that you have.
So if your end game, let's say, and most of them go into either a business or farming, and both, if you ask me, are equally as risky.
Yes.
Right? Because you've never farmed before.
You forgot to say matatus. There are some who buy matatus.
Oh, no.
Because I think it's a very profitable business. Let me tell you honestly. If you buy a matatu at old age, you can be sure 6 months later you'll be buried.
6 months.
6 months later you'll be buried. You have one matatu, and you now want to compete with cartels. Cartels of guys that have got fleets of matatus. Landing into hundreds.
Yes.
When the cop have to arrest a matatu, yours is the first. You're arrested. When the municipal council people have to, told the matatus, yours is always targeted. When you look at most of the cartels out there, they are actually pushing you to the corner. You are bringing competition.
You're bringing competition. They don't want
Yes,
that. So they send you're
a victim.
Oh, you poor.
And you see, if it's arrested, and it's the only matatu that you have, how then do you survive the next 2-3 days as you struggle with the police, with all the bribes to get your matatu out?
Yeah.
It's a difficult.
It's a bad idea altogether.
Yes.
So when it comes to me, if retirement, because I mean life sometimes happen and you find yourself at the end of your career,
Yes.
and you have small money and you're wondering, okay, what do I do with this money? First, I think the number one thing to do is to not find yourself in that situation.
That is true. Having little money is already a big problem.
Yes.
Having little money is already a big problem.
Do not find yourself in that situation.
Yeah. But should you find yourself there, the first thing to understand is your risk appetite. How much risk can I bite at this point? And what options will I have? If I bite higher risk that is going to wipe all this cash, what other options will I have? That's what people don't see.
Yeah.
Because the higher the potential return, the higher the risk you're going to be exposed to. You go to those kind of businesses, just know that the risk is 200%, 150%.
Yes.
It can wipe all that you have.
Everything.
But what will you then do after that?
Yeah.
If it was a young person, you go back to the drawing board and start over again. But another person who just retired and all your retirement money has gone, what will you do? Wait upon the road.
Wow. Now that I'm having this conversation, I think growing up old and finding yourself in that situation is the saddest thing that can ever happen to anyone.
Anyone that is listening to us and who cares about their tomorrow, I am saying and again, please be deliberate in putting a portion of your income in percentage to start building a cushion for yourself.
Yeah.
The life ahead is going to be very tough. We possibly the last generation that is taking care of our parents.
I don't think my daughter will take care of...
Anyone who is 40 and above is in the last generation that is taking care of their parents. Anything below that, I am telling you, as parents, we have to take care of ourselves.
Yeah.
Like say, for example, my children, they are all young people. I'm not hoping that they're going to take care of me. If they'll take you to hospital, they want to use your car. If there's a bill to be paid, it is your debit card, it is your medical insurance, it's you to pay.
Yeah.
Theirs is just to facilitate the movement. Theirs is to facilitate the movement. It's not coming to pay the bills.
No.
And that is what parents must know. Your children are not there to pay the bills. They are not coming there to handle the obligation. No. They are facilitating your movement as a patient.
So, talk me through the different investment options that are available. if I came to you today, I am 36 years old, and let's not talk about what happened in my 36 years of living. Let's start now.
Yes.
Right?
Yes.
What are my options right now?
As an expert, when that question comes, and it quite often comes from people out there, the first thing I want to understand is your present circumstances. Yes, you could be 36. And because I told you that the financial wellness comprises of these 3 pillars, the short term, medium, and long term.
And long term.
I would actually take you through each of those pillars to understand exactly your level of preparedness. Now, in terms of the short term, I'll want to ask you, Anne, what is your average current income? Maybe you'll tell me that maybe my average income is 300,000. Then, of these 300,000 shillings, how much do you spend on a monthly basis? You might tell me that out of the 300, my spending level is maybe 120,000. Out of this 120,000, the first recommendation, and which I also established the reality from you, have you been able to build an emergency fund of anything between 3 times of that, which is 360, up to 6 times of that, which will be about 720?
Yes.
If you tell me that you don't have an emergency fund, we immediately start a conversation around the money market. A money market is an uncontractual investment where you can be building the savings into that program, and that program invests in government securities. Look at government securities such as the treasury bills and the treasury bonds, the debentures, commercial papers, etc. In this particular account, what informs your decision is accessibility, liquidity, and safety.
Yeah,
of the
because
money.
it's an emergency fund.
It's an emergency
I need to
fund.
be able
You
to
need to get
access it
whenever a need comes up.
Correct.
Okay, so we will first of all build on an emergency fund. Now, from there, as I said earlier, an emergency fund has a very conservative return. So if you now start building an emergency fund into the tunes of millions, or else your need is only between 360 to 720, you'll be losing out on potential.
It doesn't make sense.
So I'll now want you to diversify the scope, have now another program that now will be focusing on slightly longer term for higher return. That is now the space I talk about, the contractual investment. You remember earlier on I talked about endowment policy. Endowment policy is normally an all-in-one. It comes with investment benefits as well as risk management. Risk management, we're looking at the risks that you're exposed to as a person or even as a family. Whether this is about death, whether it's disability, whether it's critical illness. We also want a product that beats inflation. So in that particular space, we want to look at how you can build a portfolio contractually towards a certain goal. Maybe you might tell me that, Alfred, you know what, at 36 I'm still paying rent. I really want to buy a house by the age of 50. So I look at how many more years do you have between now and 50. That would mean about 14 years. So what kind of a target do you want to give ourselves? Maybe you tell me that, you know, I need to have a fund of about 20 million shillings. So between now and the next 14 years, how can we build a 20 million shillings fund on a contractual basis? The quotation will show me that if Anne today starts putting aside maybe 70,000 shillings every month and allows an escalation of 5% every year, we'll be able to get to, say, 20.5 million shillings. So that is how I'll derive the idea of the contractual investment, which is now the endowment policy.
I see.
Of course, when you are going through this, we'll also look at other circumstances. If you have children, maybe the child is 5 years. A child who is 5 years will certainly be going to university in the next 12 years, 13 years. So we also want to have that in mind. Yes. We want to have that in mind. That we don't want to allocate funds in a way that is going to disrupt the realization of this goal of buying a house. See, this goal of buying a house could easily be disrupted if you're not investing for the child. That when the time comes, you will have the money for the house, but don't have money for the school fees. So you want to be careful enough to ensure that every aspect of your contractual obligation is taken care of. As you invest for the house, these other obligations that are also coming your way. For example, paying school fees in the university or paying school fees for a child who is abroad. How are you also planning to have the funding for that child at that particular time? So that, you see, if you just go one way, you are only focusing on the house, you'll have the 20 million. But what if you don't have money for educating the child? We end up diverting the money that was meant for the house to pay school fees, because of course that's a priority.
Let me tell you the difference that I see from the plan that you just told me.
Yes.
And I believe, again, this is part of the evolution that we talked about, where you are more informed. Even the salespeople who are actually dealing with clients and advising them, they are actual financial advisors. They've just not been given a flyer with 5 bullet points and that's all they know about that product.
Yes.
So they're able to take you through a journey.
Yes.
Because I think previously, let's say 7-10 years ago, you would get someone with a policy. They have come to sell you this.
Hard sales.
You had sales.
It's
right?
about their need, not their need.
Exactly.
Yes.
So it's about their need, not mine.
Yes.
So when I listen to them, I'm like, that makes absolutely no sense to me.
True.
So I will quickly move on to my other things. I will not probably even put that money to any good use after
true.
that.
100%. That is true.
So you understand?
Yes.
So because they did not take time to first understand where am I? Because if you give me all these things, all these categories, you've talked about the risk aspects, that's life insurance, health insurance, Then you talked about education. You've talked about emergency fund, and you've talked about the endowment fund.
You're such a good student.
It makes, yes, I'm listening. I'm paying attention.
Yeah.
So now, if you come to me with these 10 items, and I'm supposed to make a decision on all the 10,
to start.
On where to start.
Yes.
You see, I will get confused. There's a house, even. So I will get confused, and this confusion will bring what? Procrastination.
That is true.
So I will not move.
That is the reason.
I will not make a decision.
That's the reason you're an expert.
And now I will, the next insurance person, I'll be running away from them because I know these guys are not here to provide me with solutions.
You, as an advisor, you'll know that you've done a good job if you are able to lay good foundation with that client and agree that based on my current income, today we are going to take up this plan that is meant to build savings for my child's education. I will need this money in the next 15 years. Alfred, I would like you to come back and see me in the next 2 years. I want to clear most of the obligations that I'm handling now so that I free up some of the money. I start off another investment for my own personal retirement. See, you already have a roadmap with the client.
Only if you have time, if you've not called Alfred at 57.
You see, a lot of people now call you at 58.
Yeah,
but at 58,
you can't.
What journey can you have with them?
Yeah, you can't.
There's no journey. That's why people need to take up these things when they are in the younger phases of life. The 30s, the 20s, you know. And you didn't have to go far, the 40s.
Yeah.
Unfortunately, most of the people don't. At that particular time, they are spenders. They are procrastinators. They don't want to even listen. They don't want to be advised. So they only come seeking advice the 9th hour. And you see a lot of the people that come to us 9th hour, they have already tried pyramid schemes.
Can you just
they have already tried pyramid schemes.
Oh wait,
and they have failed.
Oh wait, like they got their, where did they get the money to invest in a pyramid scheme? Maybe like the pension and SSF Labda?
You know, with the little money that the person will have, they want to multiply it. Only because you wasted your time. Now the little that you have, you want to multiply it.
Yeah.
And you now go into unreasonably risky investments. With the hope of trying to multiply that money. People have ended up into...
And we all know there are no shortcuts. They don't
you know, some of these things that we know...
there's that lady who conned a couple of guys, I don't know what promise. It was just, how do you double your money?
They're calling guys who are educated. Not people who are not educated. They are calling people who are very educated. So I would say that's like... What is that? Is it they've gotten to a point of desperation? One, there is a lot of greed in Kenya. When it comes to financial matters, there's a lot of greed. Make it quick. Yes, I want to put in my money, but I want profits immediately. Make it quick. People don't want expert advice. We think that expert advice is expensive. So we want to try the mediocre way. You think that you can be able to beat the system. And these are the same people who you see crying in the streets, you know, asking for justice, the government to intervene, all those things. But they left the experts who could have advised them.
Yeah.
How can you believe a story of somebody who's promising to pay you 23% every month in an economy that is generating 16% per year? Let me repeat
it
that
makes
again.
no sense.
An individual is promising you 23% per month in an economy that is hardly generating 16% per year.
That person deserves to be conned, I'm sorry.
It's true. And there are people who are conned this time and were also conned 3 years ago. Their life is only about being conned because you are not learning. You're not learning. You had a bad experience with a con man or a con woman, and you get into the same again 3 years later. That is pure greed. Totally greed.
Oh, wow. My goodness. I hope you guys are learning. So tell me, have you interacted with these individuals who find themselves at the end of the road with no plan?
As I said, that's where the bulk of Kenyans are. Those that are getting to the finish line, they are not structured. Lots of regrets, blame games, and I tell you what.
And bitterness.
There's a lot of bitterness. You see people even committing suicide. Okay? You see people, lots of people divorcing at that particular time. Why?
You're divorcing at 60?
Yeah. the person lived fake life.
Oh,
You
Lord.
thought they were doing what they ought to have done, build security for the family.
Yeah.
Only at the finish line, you see the guy's car has been auctioned. Even the house where you lived together has been taken. With that, in that misery now, the only thing that happens is the children are most likely going to take their mother away, and you'll be left there alone.
Yeah. I don't know if this statistics sort of make sense to you in your industry, but I've seen women, when it comes to personal development, are more hands-on at the moment. Is it the same? When you look at your clients between female and male, how would you sort of?
It's a reality that we are struggling to even understand right now, because when I look at the two organizations that I am currently serving, that is Absalife and Old Mutual. In terms of actual statistics, 69% of investors on average, both sides, both Old Mutual and Absa, on average, 69% of the investors are women.
Let's round that off, 70%.
About 70%. So what is happening? That ladies are becoming more conscious on money matters and a lot, of course, other life issues than the men. Men have actually gone into spending. Men have actually gone into lifestyle, demands.
Is that true?
A lot.
Could it be they are providing for the family? So most of the money they earn goes into paying bills for the house because they are the provider, and the women, most women are working these days. It's not like when we were growing up and you'd have a stay-at-home mom. So most women are working, but they don't necessarily have any use or they don't have bills because the men have taken care of the bills. I don't know. I'm just throwing it. I'm throwing it out there.
I think at some stage in our lives, there was a very increased emphasis on the girl child. That ended up elevating the girl child to the level that boys are now unable to catch up. You look at most of the corporates, the private sector, most of the top performing organizations are led by the women. You go to in the corporate world, most of the department heads are women. Even in terms of productivity at work, they actually deliver more. You look at the commitment to issues of money and even issues of children. The ladies are actually taking the lead. You'd be very surprised that a lot of...
So my analogy kind of doesn't apply.
Doesn't. Today, there are a lot of men that are being housed by women. That you live in a house whose mortgage was done by the lady. The lady could be trusted more than the man. So the bank chose to give the lady the loan. The man is actually being housed. Most of the top cars on the Kenyan roads are driven or owned by ladies. Now a disaster is even happening in schools. You realize that these ladies or these mothers are the ones paying school fees for the children.
And also showing up
the
at
man is
school.
The man is just there.
Even
spending.
showing up at school, you find more female parents.
Even school meetings, men don't appear.
Yeah.
It's the mother that is appearing.
Why do you think that is so?
I think it's a complete shift in the way people are addressing life.
Like,
complete shift.
What would you think? Why? Why is it like so?
Is it like complete lack of mentorship or what?
I don't know.
Because as I grew up, I knew my father was everything. He was the leader of the family. Today, the status is different. The men who are in my space right now, they are very, 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 very few who can say that they are leading their families. They are actually being led by their wives. Very few men can stand and tell you that I'm the one who is leading my family. Very few. Even the children have started to know that my dad doesn't make decisions anymore. It's my mom who makes decisions. My dad doesn't pay bills anymore. It is my mother pays the school fees for me. Things
if you were
changing.
to guess, why is that? Why this shift and change? Or it's the women empowerment, but the boy was not empowered enough to deal with this empowered woman? I
think that will partly explain, because the emphasis was prolonged. Interventions are now being made at this point when the boy child has very lost it. But the girl has excelled completely. Catching up is going to take us centuries.
Another couple of years.
Yes, many years.
Many years.
Then go to schools. The emphasis on the girl child has taken the girls to the next level. The boys are still struggling. You know, the day I visited a school, and was there with my wife. We were visiting a niece. It's gently. When I went to the washroom, the boys' toilet was stinking, dirty and everything. Not even tissue.
It's a mixed school?
Yes.
Or it's a university?
The mixed college.
College,
Yes.
college.
The male side, stinking, smelling, no tissue, no nothing. Even water was lacking. The lady side, my wife went and told me, no, there was tissue, there was water at the sink. I mean, you're asking yourself, it's gone that far.
Really?
It's gone that far. You can imagine the college where the boys are completely neglected. And the girls are completely taken care of. It's gone that far.
Wow.
When you are shopping for your son and you're shopping for your daughter, the bags are very different. The shopping basket is
it's wow. Okay, hopefully the gap doesn't continue to widen because
so.
I mean
but
our children
we see
will
intervention
suffer.
now to try and rescue the boy child.
Okay.
It's gonna change the situation, but not so soon.
Not soon. It's gonna
Not
take
so
some
soon.
time.
Not so soon.
Wow, this has been quite the episode, and I've learned more than I did even last time when we met. And I truly appreciate, and I hope that Alfred, but before you even wind up, where can they find you?
Okay.
There's someone listening who needs a financial advisor who that journey sort of made sense to them. Where can they find you?
Thank you very much. You know, in financial planning, we say that no one wakes up to fail. People only fail to plan. As a financial consultant, I'm available here in Nairobi. I'm a call away, I'm an email away. If you want to be guided or supported in making best decisions in as far as your money is concerned, please look no further. You can reach me on 0722 310 584. I repeat that, 0722 310 584. And if you call and I don't pick up, in a lot of cases, I could be in a meeting. Just drop me a text and you can be sure that I'll call you back at a convenient time. Please do not let yourself go down because you didn't make good decisions. I'm here to help you. Make use of me. It's a free financial talk. I will give you the best to empower you to make the best decisions because your future is coming and it's coming very fast. Remember what they say, and even the Bible emphasizes it, a wise man and a believer woman leaveth inheritance for his children's children. Don't be that person that is going to die broke. God wanted all of us to get the finish line with enough for ourselves, enough for our children, enough for our grandchildren. So I think it is important that all of us get to know how to deal with financial matters so that our monies live beyond us. Let us try to build good legacy. Once again, I say a big thank you.
Thank you so much.
This
was so wholesome, and I hope that you're not going to eat until when you're 57, 3 years to retirement, or after retirement with your small package, because at that point you really cannot be helped. This was so impactful, and I'm sure it's going to impact their audience and also give them just a little bit more courage to do that thing that you've been procrastinating and saying you're going to do, and you just never get around it. Thank you so much for joining us. Thank you, Alfred.
Thank you.
For joining us as well. Until next time, I'll see you.
Bye-bye.